Okay. CVE, Toronto Stock Exchange. That stands for Cenovus Energy Inc. I got a triggered alert today. One of my many alerts that I always set. Sometimes they just don't make sense. When I look at them a few weeks in the future or later, the chart just looks a little bit different, but that's okay. It gets me back to it, and I just give it another whack. See if I could just re-practice my frameworks. Presently doing Secretwars, Stan Weinstein, stage analysis on the weekly candle chart, and using my classical trading framework for the higher prevailing trend on the monthly, and combining both to give me those highest of probabilities of reaching possible positive results. Have the ADX out there again, just to give me see if that 20 line is good to try to isolate stage 1s and 3s. And it looks pretty much like this would have been stage 1 right there. Let's back it up. There you go. So let's have a scanner. I want stocks with that have been for 6 months under 20, and this would have popped up, and I would have said, "Oh, cool." I would have drawn some lines here. I would have drawn either line here. And what I would have seen right here, see the stock starts breaking down before, maybe 20 is too high. I don't know. Maybe sometimes I'm listening, maybe if you want the tightest of ranges, maybe 15, 12, maybe it'd be better. Maybe less rare, but that's going to make it an even tighter range. Because right now, if I would have waited for this one for 20, under 20, it's already starting to break down right there. Below the 30-week moving average, below the breakdown line, below the Ichimoku cloud. I just didn't have the volume though, so we would have not entered because we don't have the volume. But all the other indicators, confirmations are there. What I have had, let's put an arrow. This one here. Let's just see on the monthly candle chart how that would have looked like. Yeah, you see it's right there. So I would have even had a breakdown on the monthly candle chart. Here's the breakdown line on the monthly candle chart, excluding the wicks, which is the noise of the weekly and daily. And right here, this candle would have been a breakdown. This one probably too close. You could have probably said, it's too borderline. Still an area of support. And you would have just waited for that one. So this would have been a nice breakdown candle. With implied measure move. Added to the breakdown line. And you would have had target all the way down here, which would have been reached 1-2 months later. All right, so that's how I like to do that. When you have an indicator, like a scientific experiment, just change one variable and keep looking at it, seeing if it fits, if you're getting good correlation. But I do that knowing full well that the own correlations, they're good until they're not. The only thing that's really true is these little candles, the price action. All the rest, indicators, anything derived from it, is just noise. So it's worth what it's worth. It's fun. You get curious. Makes good conversation, but essentially, you could drop that. And here it was. So what happened here? It did go into a nice stage. That's how you like them. stages, stage 2s and 4s. You want them aggressive. You don't want pullbacks, severe pullbacks. If you have the pullbacks, you want it on low volume. Look at that. Here's the volume picking up. So the breakdown, you could have entered here, maybe low volume. You would have said, let's wait. Pulls back up, and then you have these crazy candles. Then you're in for sure. 1, 2, 3, 4, and you would have exited right here. That's just crazy. Or this candle. Let's add the candle right here. Right here. This candle here, you would have exited at the end of the week. The one that closed, or even this one, you could have probably stayed here. This one, you're out. Half of your position, traders, investors. And remember, on pullbacks, you would have moved your sell stop along the way. And this was the last one. I like looking at the RSI. When I see a V or U shape, it gives me indication that the price action has went up and down. And when the price started going back towards the previous lows, slope, sell stop here. And investors right here, above the 30-week moving average, above a round number, same thing here, above the black, above a round number. And was it pullback on high volume? Yeah. So you see, that's another warning sign right here that you don't want to see increasing volume on the pullbacks. And that's a warning sign that that trend is ending, that stage 2, that efficient stage 2. Efficient, I mean you're in and out really in the optimal way. Could be continuing, but don't want to stay there if it's not accelerating. Time is money. You want it to go to the furthest possible, as fast as possible. And any sideways move is just a risk of going back in the opposite direction and you're getting triggered out. You get out. Warning signs, high volume on the pullbacks. Warning signs, trendline violation. And that should be enough to take half of your position here. And the other half, when you reach that, when you reach the sell stop, you move there. Investors, same thing. When you're trendline violation, investors start behaving as traders for their exits, and you're out. Either price action goes back in, goes into a zigzag, consolidation, sideways move, stage 3, stage 1. You don't want to be there. So that's typical. These are the best ones. Far away from the 30-week moving average. This is just a pure stage 4 breakdown. Timber. All right. Cool. Got to practice a little bit. So that's where we are today. Okay, where we're at. Right now, if I'm going to reset my alerts, I'd put an alert right here at the 1450 level. The bottom is really clear. It's 9 level. And what we have now is we have some resistance here. 30-week moving average starting to go back up. I don't have the Mansfield indicator as stand, but I'm still using the RSI. I like seeing it from the halfway point going up. Very good sign. Do I have the volume? See, it's not twice the average volume. It's twice these candles. And you want volume to be twice the average of the previous 4 weeks. Still not bad on 2 successive candles. So let's say we get anxious to pull the trigger. The only thing I see that's wrong right here is this resistance right here. So I'd like, maybe the price action going to take a little while to get here, and maybe it's going to bounce. Maybe it's going to bounce back down, and maybe eventually it's going to bust right there and go out. So we're going to wait for a candle to close above the 1450 level, or more eventually if it breaks out here, or else it's going to be the 15 level if you want to break out maybe above here right now. But this looks ready for stage 2, guys. It's really good signs for that. And let's go check the monthly candle chart on the high preferring trend. Remove all trend lines. And right here, look at that breakout line. So on the monthly, we're really flirting with it right there. I'm just going to set the alert just a little higher. And we even might have the monthly candle breakout. Wow, so this looks really nice. This strong base. And hopefully we get to play that as a stage 2, guys. All right? See ya!